Hello and welcome. The experts here at Pro Tax Accountant have put together this guide to tackle a really big question for successful business owners in the UK. When is it time to switch from being a sole trader to a limited company? If you're serious about growing your business, this is for you. So let's jump right in. Okay, let's get straight to it. A simple question for you. Is your business pulling in profits of over £50,000 a year? If you're nodding your head right now, or you can see that number just around the corner, then the next few minutes, they could honestly be the most valuable you'll spend all week. And why is that? Because there's a very good chance you are giving away thousands of pounds in tax that you just don't need to. That's cash that should be in your business, fueling your growth, or, just rewarding you for all that hard work. We're going to show you exactly how to hold on to it. To help you figure this all out, we've broken it down into 5 clear sections. We'll start with why you should even think about switching. Then we'll get into the practical how-to. After that, we'll cover what your new responsibilities look like, the costly mistakes you've got to avoid, and finally, how to get advice that's tailored just for you. Okay, let's tackle this first big question. Is it actually time to go limited? To make this real, let's imagine someone. Let's call her Sarah. She's a fantastic freelance graphic designer based in London. Her business is absolutely booming, but as her income goes up, so does her tax bill and her anxiety about financial risk. She's thinking hard about incorporation. That's just the official term for turning her sole trader setup into a proper limited company. So this slide here shows the 2 massive differences that really drive this decision. First up, liability. As a sole trader, in the eyes of the law, Sarah and her business are the exact same thing. So if her business gets into debt or, heaven forbid, gets sued, her personal stuff, her house, her car, her savings, it's all on the line. That's what we call unlimited liability. But a limited company, it's its own legal entity. It creates this protective wall between the business finances and her personal finances. I mean, for peace of mind, that's a total game changer. And then, of course, there's the tax. As a sole trader, Sarah's profits are hit with personal income tax rates, which can climb all the way up to 45%. Ouch. But a limited company pays corporation tax on its profits first, and that's at a much, much lower rate. This brings us to what I like to call the magic number. For the 2025/26 tax year, £50,000 in profit is really seen as that tipping point, where the math starts to seriously favor a limited company. For someone like Sarah, hitting this number is the big financial trigger. So we've covered the why. Now let's get into the nitty-gritty how. This is the 5-step switch. It's the exact roadmap Sarah would follow to turn her business from just Sarah the designer into the much more professional and protected Sarah Designs Limited. Here they are, the 5 key steps on your screen. Now, I know looking at it like that, it might seem a little daunting, but I promise it's a really logical process. We're going to walk through each one so you have a super clear roadmap. Honestly, it's more straightforward than you probably think. Right, first things first, you have to actually create your company. You do this by registering with a place called Companies House. And the best part? It's ridiculously fast and cheap. You can do it all online yourself for just 12 quid. And boom, in less than 24 hours, your new company is a real legal entity, totally separate from you. Now here's a little pro tip for you. If you're short on time or just a bit nervous about getting the paperwork right, you don't have to go it alone. There are these things called company formation agents. For a pretty small fee, they'll handle all the registration stuff, make sure everything's correct, and can even help you with things like getting registered for VAT at the same time. It's a really smart investment for a stress-free start. Okay, step 2 is absolutely critical. You cannot forget this one. You basically have to officially break up with your old business structure. That means you have to formally tell HMRC that you're stopping trade as a sole trader. This is so important to make sure you don't get taxed twice on the same income. And at the same time, you'll register your shiny new company with HMRC for corporation tax. And just like that, you've done it. The switch is made. So welcome to your new life as a company director. Look, yeah, there's a bit more admin, but the real prize here is the massive increase in financial flexibility. This is where you can get really smart about how you pay yourself, and that's where the big tax savings really kick in. This little table here really gets to the heart of the strategy for the 2025/26 tax year. See, as a director, you can pay yourself mainly in 2 ways: a salary or with dividends, which are just a share of the company's profits. Now look at this. If you take £10,000 as a salary, you'll pay £2,000 in income tax. But If you take that same £10,000 as a dividend, the tax is just £875. The difference is huge, right? So the most popular strategy, by far, is to pay yourself a small, tax-efficient salary and then take the rest of your earnings as dividends. So what about that extra admin I mentioned? Well, it really just boils down to these three key jobs each year. You've got to file your company's official accounts, file a corporation tax return, and send in something called a confirmation statement, which is basically just a quick snapshot of your company's details. It's a totally manageable list, and you'll want to stay with me here. Getting this stuff wrong leads us right into the most common mistakes, and they can cost you a fortune.
That's not all, though. This is where so many new directors trip up. Just knowing about these common traps is honestly half the battle. So let's do a quick fire round of the 3 biggest pitfalls so you can avoid them from day one.
Okay, the biggest mistake, and it's not even close, is mixing your money. As a sole trader, your business and personal cash probably lived in the same pot. Well, as a limited company, they are legally separate. It's simple. The company's money belongs to the company. It's not yours. You must open a separate business bank account. Using the company card for your weekly shop is a massive no-no and can get you into some serious hot water with HMRC. Mistake number 2, underestimating the deadlines. Look, Companies House and HMRC, they aren't flexible at all. Those annual filings we just talked about have hard, immovable deadlines. And the penalties for being late, they're automatic and they get expensive fast. They start at £150 but can easily jump to over £1,500. This is just throwing money away, so get those dates in your calendar now. And finally, mistake number 3 is not budgeting for professional help. The truth is, the accounting for a limited company is just more complicated than for a sole trader. So while you'll be saving a ton on tax, you need to plan on investing a small slice of that back into good accountancy. But don't think of it as a cost. Think of it as an investment in your compliance, your peace of mind, and expert advice that will almost certainly save you way more than you spend. So there we have it. We've walked through the why, the how, what your new life will look like, and the big traps to avoid. Which brings us all the way back to the most important question of all, the one only you can answer. Is making the switch the right move for your business at this very moment? You know, if there's one single thing I want you to take away from all this, it's this. Incorporation is not just a bunch of paperwork. It is a fundamental strategic decision about the entire future of your business. It affects your risk, your take-home pay, your potential for growth, all of it. Getting it right from the very beginning is the single best thing you can do to set yourself up for long-term success. Every single business is unique. Your goals, your industry, your personal situation, it all matters. And that's exactly why the best next step is always to have a chat with a professional. The team at Pro Tax Accountant, well, they live and breathe this stuff. They specialize in helping business owners just like you navigate this exact transition, making it as smooth and as effective as possible. You can reach out to them directly, and it's a no-obligation chat. The number for WhatsApp or call is 07985689912, and the email is info@protaxaccountant.co.uk. Getting clarity is always the first step, so really don't hesitate to get in touch. I really hope this step-by-step guide has given you the clarity and the confidence you are looking for. The real question isn't just about saving tax, is it? It's about building a stronger, safer, and more scalable future for your business. For more practical advice to help you on that journey, make sure you subscribe to the channel. Thanks so much for watching.